Right, we're 1 week away from the Canadian federal election, and it comes at a time of global uncertainty around trade and the economy. Joining us now to discuss the potential investing implications and to preview Canadian earnings season is Michael O'Brien, Managing Director and Portfolio Manager with TD Asset Management. And Michael, thanks very much for joining us. As I mentioned, there's lots going on with global uncertainty and earnings. We'll start with the Canadian election, which is, of course, 1 week away. How are you viewing this from an investment perspective?
First of all, thanks for having me on, Anthony. It's always nice to come in. So I think the election coming up, it's going to be one of the, I guess every election's important, but I think this is a little more important than most. So,
this one.
I think a lot of people are going to be very engaged watching their screens next week to see how the numbers come in. I think from an investment perspective, what I think is interesting about this is, if you think the moment we're in right now as Canadians, obviously, the Trump administration's attacks on Canadian sovereignty, on tariffs, it's really galvanized the country. And so I think what's interesting about it is more so than in a lot of elections, what it's done is it's forced the leaders of, the two main parties to really be laser focused on what's critical at this point in time, which is the economy. I think if you look back at the last government, their priorities were more about, social issues, redistribution of wealth, whatnot. I think in this moment, both the Liberals and the Conservatives are laser focused on what the economy needs, because I think they both realize, as we all do, that, the surest way for Canada to remain a strong and independent nation is to, have a strong economy. So from an investment perspective, I guess what I'm getting at here is, I don't think it's so much whether the Conservatives win, whether the Liberals win. I think in this case, which is a bit unique in, relative to previous elections, whichever party wins, I think they're both going to be laser focused on the economy, focused on, taking down interprovincial trade barriers, better access for our resources to, global markets. All of those things that, perhaps were neglected a little bit over the last 5-10 years. So I think from that perspective, that's the silver lining in all of this, is that I think either party is going to be very focused on the needs of the economy.
Yeah, as you mentioned, the economy will be a big focus for both parties. Once we get to election night, what will you be watching closely?
Well, I mean, we've always got our, we're favorites or we're watching, in a particular riding, but I think the simplest thing for me is simply going to be, do we get a decisive majority government? Like I say, whether it's Conservative, whether it's Liberal, I think that's what I'm going to be most focused on is, do we have a strong majority government, or is it, a weaker minority government? Because I think really what I'm hoping for from an investment perspective is a government that has a mandate and has the, the seats in the House to implement a strong agenda. And so obviously I'm hoping that we get a decisive verdict and that we get a majority government so that, some of the tough decisions that need to be made can be made in timely fashion.
Okay, so let's pivot over to the markets where we're heading into another earnings season. And you say that it might be a tricky reporting season for some Canadian companies.
Yeah.
What do you mean by that?
Well, I think tricky could be a euphemism for very difficult. And I'm not saying that from a perspective of what the actual results are going to be. Rather, it's, how do you communicate your expectations going forward? So, you think about any earnings season, part of it is sort of a 3-month checkup on, how's business been over the last 3 months? And then, the other equally, if not more important part of it is, how do we think things are looking going forward?
What's their outlook?
And that's the challenge right now in this environment. There's just so much uncertainty. Nobody quite knows what the rules of the game are. Are tariffs on? Are tariffs off? What rate on tariffs? Are there more tariffs coming?
A lot of uncertainty.
So much uncertainty. So it makes it very difficult for the for the business leaders, for managements of these companies to give any sort of firm guidance going forward. So I think as investors, we're going to have to be prepared for more honest conversations about, look, we're not sure what the future holds. So hopefully be more about contingency planning and if this happens, we're ready for it, or those types of things. But it's going to be maybe similar to the COVID period where, the rules were kind of in flux, but, a very unique moment in time for management teams. So I think, we've got to take that with a bit of a grain of salt, that guidance, they'll want to give some comfort to investors, but it's just so uncertain right now that it's going to be a bit of a jump ball.
Now, you also say that the big banks will be worth watching. How come?
Well, I mean, the banks are always a critical part of the Canadian market, but I think at this moment in time, we're all trying to get a window into what may or may not be happening under the surface, with the economy. Obviously, there's been a lot of tariff uncertainty. That's not just the first order effects of a tariff on this good, which now costs more, difficult to export. It also goes to the decision making of these, both households and companies in terms of, capital allocation. What are our CapEx plans? Are we going to open a new factory or should we wait? All of these types of things, there's a bit of a freezing effect from this uncertainty. So as investors, we all want to get a sense of, how big and how fast is this impacting the real economy? There's no better window into that than the banks, obviously. And so, you'll see it in their loan growth. Is loan growth slowing down or freezing up at all, or is it still, resilient? But most importantly, in their loan books. Are we going to be seeing what was, a leveling out in provisions for credit losses in recent quarters where it seemed like maybe the worst was behind us? Are we going to see a reversal in that trend, which would necessitate some reductions in earnings expectations for 2025, 2026. So I think that's where I'm going to be focused on looking at the banks is how are their loan books shaping up, the actual impaired provisions for credit losses where people are delinquent, but probably, more of a leading indicator, the performing provisions, which are basically management's expectations of, how much do we need to put aside if things continue to get worse. So I think that'll be a bit of a window into how quickly these events are impacting the economy.
And when you look across the TSX and the different sectors, have you seen any areas of opportunity?
Well, there are always areas of opportunity, but right now we're at an interesting moment in time where, as an investor, do I want to play offense? Do I want to play defense? And usually when you say, are there areas of opportunity, I usually think of, playing offense, like, what's the beaten down stock we want to pick up right now? For sure, there are those out there. But at this moment in time, as an investor, I'm more in a wait. I want to see, before I start trying to look across the valley, I want to get out from the brush and actually look and see how big the valley is. How much of a jump is this? So I'm not really in the frame of mind to be picking the bottom in some of the beaten up stocks. I've been more riding some of the names where I have higher conviction, higher quality, more certainty of earnings. So that's strangely enough, like that's where I've been gravitating to is, the more certain bets. But to your point, there is an increasingly big gap between the valuations of the haves and the have-nots. And so there will be a moment where those valuation gaps get extreme enough and we do get a glimpse of the valley. We know what we're looking across. That there will be a time for that, but I'm not sure that that's today.
Okay. Now, you also say that, earnings season may pose a risk to those defensive names.
Yep.
Can you explain that? Well,
it's exactly that. The expectations, like I say, investors, it's interesting. At any given point in time, if we're feeling more optimistic, we'll pay for the future. When we're a little more nervous about how things are going, we want the sure thing. Two birds in the hand, one bird in the bush, that type of thing. Or one bird in the hand, two birds in the bush, sorry. And so I think at this moment in time, a lot of investors have really sought shelter in some of the steadier names, like you think of your grocers or your regulated utilities or your pipeline companies. That's all good because they're solid companies, but when you get to earnings season, it's kind of a reality check where, okay, are they what we thought we were? What we thought we were buying? Because you don't bid up these defensive stocks to have them, miss on execution or report a disappointing quarter. So there's always that element of holding your breath and I think these are great companies. I think they can protect their earnings. Let's see if we're right. And if we're not, the expectations are pretty high.
When I think of defensive stocks, gold comes to mind, particularly with a lot of the uncertainty that we've seen and volatility in the markets. Maybe you can talk a little bit about that.
Well, that's a similar dynamic. I mean, it's been a challenging, first 3.5 months for investors this year. But within all of that, gold and the gold stocks have just been fantastic performers. And, again, gold, it's sort of a safe shelter in the storm. And it's been acting like that. It's been acting the way one would expect of gold. And so you've seen that reflected in the gold equities, which have had very, very strong performances. Some of them are up 30, 40, 50% year to date. Fantastic performances. So again, expectations are high. They should be able to deliver. But if they don't, there'll be some disappointment because obviously investors are expecting good things from that group.